Did the hill that we have to climb to get a deal by March 1st just get taller?
Well, I think the president's tweet this morning is sort of classic in terms of his desire to personalize the deal. So he wants to take credit for the ultimate rise to the top of the mountain, as you put it. I think the deal's going to be a weak deal, though, Carl. It'll be mainly trade, China opening up its wallet and committing to buy LNG and soybeans. But the tough structural issues that the president was alluding to in his tweet, I think will not be resolved. They may come to agreement on a framework to continue to discuss them, but I think these issues are too tough to do in the next 28 days.
But you think this so-called purchase and promise, where they do agree to buy some goods and shelve some harder issues for later, you think that is potentially possible in the next 4 weeks?
Yeah, I do. I think there's a reasonable chance of that type of framework, but I don't think it's really going to get to the essence of the complaint that was lodged by U.S. Trade Representative Lighthizer in his 182-page Section 301 report that was published last March, a report that I've spoken to you about before. I think is seriously flawed. But you know, whether it's flawed or not, that's the essence of the complaint, and it requires major breakthroughs on the market opening initiatives that the president alluded to, but also the thorny issue of technology transfer, cyber, and state-sponsored industrial policies. And I think those are much, much tougher to break through.
Stephen, if the deal is weak, as you expect, but we get one, do we then get stability in the U.S.-China relationship? Do tariffs entirely come off, and the threat of tariffs? Can business then move forward?
Well, John, I think that the quid pro quo is if we do get a deal, that the U.S. will stand down on the threat to raise the tariffs from 10 to 25 or even expand them to another $267 billion, as the president has threatened from time to time. But I think given the intractability of these technology, intellectual property, and cyber issues, that the conflict's going to be long-lasting. Some, including Vice President Mike Pence, have called this Cold War 2.0, and I don't think that's an unreasonable way to assess what could be a long-standing and protracted struggle between these two superpowers, and that's going to be problematic for corporate America to continue to make decisions in that type of an ongoing struggle.
Stephen, we often ask you to help us understand the Chinese mindset in these talks. How are they thinking about Huawei and the extradition there and the challenges on 5G, and separately sort of our own internal domestic political challenges regarding the shutdown or the president's poll numbers, for example? Does that inhibit or enhance their willingness to talk in any way?
Well, look, I think the Huawei issues, we have said repeatedly that we want to segment or put a firewall between what we're doing with Huawei and these broader trade negotiations. I think that's unrealistic. I mean, when we're going after one of their top or the top technology enterprise in China, I think we are being naive if we think that this doesn't affect the sense of what the Chinese believe is to be our very aggressive intent, and this puts them certainly on the defensive in that regard, and it does cast, I think, more of a shadow on the negotiations than we would like them to do. I don't think they're paying a whole lot of attention to the shutdown and the disruptions and other issues that the president may be focusing on. The bottom line for China, though, Carl, is that they have their development aspirations over the next 20 to 30 years, as Xi Jinping has laid out repeatedly in public statements to the Party Congress and others, and they don't want to compromise on that. They recognize that there's a lot of pushback from us, and so they've got to negotiate some of the thorniest areas of that pushback. But to think they're going to back off on their core policies, I think, is naive.
Stephen, I want to go back to that Cold War 2.0 statement, which you said maybe isn't that far off reality. It seems to me that if that really is the framing here, that this relationship with China could get a lot worse. I mean, whatever the equivalent of containment policy is, I mean, we've still got CEOs in the U.S., Satya Nadella of Microsoft, others, talking about the future belonging to U.S. and China and the importance of working together. That's not like the Cold War was between the U.S. and the USSR.
No, exactly, and I think that's a real problem. I mean, the Chinese relationship with the U.S. has been one of challenge and opportunity over the last 40 years, and in a Cold War 2.0, it'll be more challenging. Hopefully, it will not involve the type of military confrontations that we had repeatedly with the former Soviet Union. From 1947 to their demise in 1991. But I think the thing to think about in Cold War 2.0 is that our economy is not nearly as strong today as it was during that 1947 to 1991 period. I just cite one number. Our domestic savings rate during that Cold War 1.0 averaged about 8.5% to 9%. Today it's less than 3%. So we don't have the saving to fund the buildup in innovation and infrastructure and human capital that we need to really match China the way we matched the former Soviet Union and ultimately crush them by the end of Cold War 1.0. And that's a very different perspective that I think we need to have a deeper appreciation.